Good afternoon, everyone, wherever you may be. This is Charlie Castro. I'm recording this YouTube video on Friday, May the 19th. Welcome in. Thanks for being with me for the next 30 minutes. I am your host. We've done many of these, so I thank you for listening in today. We're going to be talking about some incredibly important things. We've seen some significant shifts in the market in the last 60 days, and we felt like this was a good time to record another video. So listen in. It's going to be a short video today. We've got some changes coming up in our future, which we want to talk about today. If you have a pen and paper, be prepared to take down some notes. This is, again, going to be just a short 30-minute video. We're going to be talking specifically about some changes that we're seeing in the market and some things that you need to know about that. I consider this to be a must-watch video. If you're on our buyers list, if you're receiving our bank and or private REO tapes on a monthly or weekly basis, I would encourage you to spend the next 30 minutes. There's some very important information that we need to share with you. Primarily as it revolves around the fact that inventory is shrinking. We're going to talk about why it's shrinking. We'll talk about some market conditions. We're going to talk about how we're addressing it here, and how you can still be able to benefit by getting some good deals and some good bargains out there in the marketplace. Be prepared to adjust your buying habits. We're going to talk about that, and that's one of the primary things we're going to discuss this afternoon. Yes, we are seeing a change within the selling community, not the buying community, but in the selling community. As many of you know, we receive a plethora of inventory, both bank-owned as well as private-owned inventory on a weekly basis, and have for several years now. We're seeing a rapidly changing environment within that selling community. You need to be made aware of these changes. We're seeing, I'm going to talk about this throughout the slideshow, but we're seeing some things that are significant. And many of you that are on our buyers list that have experienced us in the last few months in particular, you know that offers you may send in at 60-70% of the seller's asking price have been rejected for the most part. We're going to talk about why and what's all going on there. We want to make sure that you're on our mailing list. We are chopping up our mailing list again. So if you're watching this, you're on our mailing list. You could be in jeopardy of being pulled off of it if we've not heard from you for a while, and we'll talk about reasons why we're going to be doing that. But it's important that you're on our mailing list. If you wish to see these lists, and you contact us and let us know that. And also, it's important that you understand the protocol is now more critical than ever, because every selling party not only has a different set of protocol, but they have a different set of price expectations that you need to be made aware of. Otherwise, you're going to waste time. You're going to fail. You're going to be frustrated with us. And so we want to address that here today. Again, expect some subtle shifts in our protocol in order to continue to assist you in a successful buying experience. We're tweaking a few things that we think will be helpful to you. Okay, I pulled this off CoreLogic. I've been reading articles all week. I've just been looking for some periodicals that would just sort of articulate what we're seeing in the marketplace. And I've just found this one actually yesterday. This is May 18th. My source is CoreLogic. I pulled this article off. I didn't use the whole thing. If anybody wants the entire article, I can certainly provide it to you. But this I thought was interesting. The article just goes into saying that the good times continue to roll for the housing market. Home prices in the U.S. have increased on a year-over-year basis now for 62 consecutive months, folks. That's over 5 years now. This housing market has continued to improve. While national prices are expected to keep rising through 2017, some states are witnessing stronger appreciation than others. We're going to talk about that because it specifically relates to the investment community, believe it or not. I was not shocked to see what I'm about to show all of you. The top 15 states where home prices are still surging against from the same CoreLogic article, with a forecast increase of almost another 5% over the next 12 months. So they're still projecting this market to continue to improve. CoreLogic goes on to say prices in more than half the country have already surpassed their previous peaks. Almost 20% of metropolitan areas are now at their price peaks. Nationally, price growth has gradually accelerated over the past year. Here's an interesting thing. That's why I highlighted it in red. Rent growth for single-family rental homes has slowly decelerated over that same period. And I was talking to a colleague of mine earlier today before I shot this. We were talking about a call we had yesterday with one of our larger vendors, private vendors, and they were telling us some things that I'll share in a few slides. But one of the things that we concluded was rents were going to stabilize or start to come down simply because the amount of inventory out there right now that's rental property. We're 10 years past the crash, almost 10 years past the crash. You had all these hedge funds, Blackstone, Havenbrook, Buy Property Direct, all these funds that spent billions and billions of dollars, Warren Buffett in that same category, in buying rental real estate. Well, now what do you have? You have in America, especially in some of the Rust Belt and Bible Belt states, you have a massive presence of rental properties. There's more rentals than homeowners, and so therefore believe it or not, now if you're in California like I am, that doesn't mean anything. But if you're in most other parts of the country, rental prices has decelerated, not increased, interestingly enough. The top 15 recovery markets, only 2 states have failed to post home price appreciation in March. That was Alaska and West Virginia. So only 2 states didn't go up in March. 15 states managed to make new highs. So let's take a quick look at the 15 states that experienced the strongest moves. This is based on a year-over-year basis. This is fascinating. This is why I chose this particular article. Let's talk about the 15 states that have improved the most. California, Alabama, 13 Illinois, Nevada, Hawaii, Florida, Michigan, New Hampshire, Arizona, Rhode Island, Idaho, Colorado, Oregon, Utah, and Washington. Now, if you notice, I highlighted some of these in red. If you look at the states in red that have appreciated the most, those are investment markets. Those are the markets that we've been telling people for the last 2 to 3 years. If you buy in California, Arizona, Nevada, some parts of Texas and Colorado, and the 5 boroughs in New York, if you're buying in those markets, forget it. They're over market value. And in the 5 boroughs in New York and some parts of California like Orange County, Los Angeles County, San Diego County, you're buying at 100 to 115% of fair market value. That's the investment market. You're actually buying over what the value of the value of the property is. But look at some of the other states: Alabama, Illinois, Nevada, Florida, Michigan, Arizona, Washington. These are all investment markets. Many of you that are watching this are going, "Oh yeah, that's my market. I buy there." Well, guess what? Those are the top 15 recovery markets. And what's that doing? It's driving up prices. As inventory shrinks, prices are going up. Vendors have told us in the last 2 weeks that the investors that bought this low-end inventory in the last 3 to 5 years are seeing the market today that they have been waiting for. They have been waiting for this peak market where they can get peak pricing, and they intend to take advantage of it. So what impact does that have on the investment community? So all of you out there, if you're a wholesaler, a buyer, a broker, an investor, or anything in between, these are the things that we need you to know. First of all, inventory is shrinking. I'm going to talk about that in a few slides. Prices are definitely going up. Sellers are less likely to sell at deep discounts. You're seeing it. If you've made offers through this office, we've adjusted ourselves in the last 10 days in particular because we saw this sort of percolating. So we started to change some things that sort of, but many of you still don't know this, which is why I'm doing this video, and hopefully you're going to take the 30 minutes and watch it. But prices are rising. Sellers are less likely to sell at deep discounts. Those, for example, some of the vendors lists that I used to send out that contained as many as 1,000 properties a month that were from private funds, private REO funds, and REITs. I would put in my protocol, offer 50 to 80% of asking price, and you'll be okay. If you drop below 50, you have to tell me why. You got to give me pictures and really make your case as to why you're under 50%. Now, if you're not at 70 to 80, forget it. If it's a $50,000 ask price and you come in at 35, they're not even blinking by going back and saying we want 48 for that property. You need to know that. Competition is for the same inventories at an all-time high. In other words, we have the same amount of buyers. Actually, that's not true. We have actually more buyers right now in our family or community of buyers than we've ever had. But this amount of inventory everybody's fighting over is limited. And of course, we're not the only marketing company that does what we do in the United States. And so therefore, you need to know you're competing with lots of people. And we're going to talk about some shifts you can make and how you can address that. We'll do that in a few slides. Bank pricing in most cases remain at or above fair market value, with some exceptions, and this is really important. If you're going to hang with me to the last couple slides, we're going to talk about bank inventory, some changes that have been there, and I don't think many of you are even paying attention to what's going on there. I'm going to explain it in detail here in a few slides. Private vendors in some cases are looking for 70 to 80% range of asking price. I've already talked about that. We're going to talk about that a little bit more, but that's sort of the number now with a lot of these funds. Now, in 2016 and 2017, the private REOs is where buyers found the best deals to be. The best deals were not coming from the banks. I'm going to talk about the banks separately, so I'm going to do this in 2 distinctly different categories. Right now, we're talking about privately owned REOs. REOs owned by a fund, by a private investor, but generally a fund or a REIT, small investment group. We used to receive from multiple sources 5,000 to 10,000 REOs each month. That was the number we would get, 5,000 to 10,000. For those of you that have been on our buyers list, you know they used to get 2 or 3 emails out of this office, in some cases with as many as 1,000, 12, 1,500 properties on them from a private REO vendor. Our largest vendor in 2015 15 through the end of 16 consistently had 12 to 1,500 new properties, REOs, every month. I got their list this month. There was 35 properties on that list. We just added it up this morning. Matt and I just added it up. Right now, we're receiving about 2,500. So we're about a half to a quarter of inventory that we used to see. Same vendors, just not as much inventory. Now, these do include REOs if you're looking for non-performing and performing notes, as well as occupied properties that have been rehabbed and are cash flowing. We do get that inventory as well. And by the way, on the note side, we are seeing a shift a little bit from folks who only wanted to buy private, buy REOs, are now looking and considering buying non-performing notes. Why? Because non-performing notes you can still buy for 55 to 65% of the unpaid balance. So if you're willing to take on a note, do the eviction, go through what you have to go through on a non-performing note, and then foreclose on the property, yeah, that's what a lot of the hedge funds are doing. If you didn't know that, a lot of the hedge funds now focus their intention on buying bank notes because they can get them cheap. They got to do some work. You got to have infrastructure to do that, but that's where you can get some really good deals. So if you're interested in notes, let us know. We've sold bulk packages, by the way, on these low-end REOs for as little as $3,500. Really, that's not even true. We've sold some recently. Well, we have one list for sale right now in Detroit. It's a tax sale list that goes to tax sale June 7th. You can buy for $1,100 a door. So you get some really good prices on there. A lot of these are under $10,000. But anyway, the point here being, though, is that we're seeing a half to a quarter the amount of inventory we were seeing just 90 days ago. Okay, protocol on private REOs. I'm going to do this really fast. There's a couple things that you need to know here. First, if you're on our list, we don't mass blast out lists. So if you're not in our list, make sure you contact us at preauctionbids@gmail.com and we can get you on the list. That's the first thing you need to know. The second thing is you have to do your due diligence up front. This is now unilateral across the board, bank or private, doesn't matter. If a seller's selling an REO and you make an offer on it, they consider that to be a binding offer, and they're going to go close. They're not going to say, oh yeah, thanks, we've agreed to your price, but you now get 10 days to go do due diligence. That's not how it works. You do your due diligence up front, and then you make your bid. Unlike bank property, on private stuff, we can usually get you lockbox codes, and I'll talk about where we can get you lockbox codes from the banks in a few slides. Most of these are going to have small liens. Now, the banks is a different story. I'm just talking private REOs now. But on private REOs, you're usually going to find liens. Sometimes they can be little, like $500. Sometimes they can be larger, like $6,000 or $7,000. It just depends. But you have to look for those because they're going to expect you to pay the lien. Now, that doesn't mean you can't adjust your price to compensate for the amount of the lien. For example, if somebody's asking $5,000 for a property and there's a $2,000 lien on it, it's not unreasonable to come back and say, I'll give you $3,500 for it or something like that. That's reasonable. But make sure you check, because once you make your offer, the seller assumes you're going to contract. Please be sure to read the protocol provided on each list. That is so super important. Now, I know it probably bores you. I'm the one that actually writes the protocol, and I do this almost daily as I get new inventory in. But I do take 30 minutes every time I write one of those to make sure you understand the buyer's expectation, the seller's expectation price-wise, what they expect you to do in terms of when you can get lockbox codes, if you can get lockbox codes. All those sorts of things are critically important, but the main thing is pricing. If you get a list, I guarantee it, I will tell you what you can expect the seller's willingness will be in terms of price flexibility. I will give that to you in that protocol. It's important that you read that. How do these close? Now, this is new information, just good to know. It used to be on low-end REOs, it was only quitclaim deeds. Now you can get warranty deeds or quitclaim deeds, but when you make your offer, we want to know when you want to close, and we want to know that for a reason, because if you're doing a quitclaim deed, that does matter to the price. Anytime you tell a private seller that you're willing to close by quitclaim within 5 days, you've done your due diligence, you've been to the property, you inspected it, you know what the liens are, you know what your liabilities are. If you're willing to do the title work after that, now, and the reason for that's real simple. You're going to get a better price if the guy gets it off his books quick. If the seller's going to get the property off their books in 5 days, and you're willing to do that, they're going to be a lot more likely to take less money than if you say, I want a discount and I want a warranty deed too, and it'll take me 10 days to close. There's nothing wrong with that, by the way. That's fine. That's generally the typical way to do it. But just know in the back of your head, if you want to get further price reductions, quitclaim is going to get you a lot better price. As I said, a warranty deed price will be definitely less negotiable on a warranty deed than a quitclaim deed. Now, new protocol. This is very important. We're going to require that all REOs, just like on bank properties, that when you make your offer, you do two things. You give us an offer, and you give us your highest and best, and here's why. We have literally lost probably 15 to 20 sales in the last 2 weeks, no, without exaggeration. If you're some of you that are watching this, you know, because it could have been you, because you made an offer on something, you came in low, somebody else came in higher, got the property, but when I went back to you, the response from the buyer was, oh, I'll go 50,000 for that. I offered 40, but I'll go 50. Well, if you'd have told me you would have gone 50 up front, I could have submitted that bid just like I do with a bank. Our offer's 40, our highest and best is 50. We'll never spend that money if we don't have to, but if I'd have known that that buyer would have gone to 50, I would have offered 40,000 as the low and 50 is my highest. And if somebody else came in below that, you would have won the property. So now we're going to ask that when you send in your offer, we need you to give us your highest and best. If you're just going to lowball something and you don't get the property, don't complain to us. This is the selling environment we're in now. These sellers have gotten very aggressive. They recognize the market. They recognize the fact they don't need to take deep discounts. They're going to give you a better price than a quick claim deed, but you always want to give me your best offer. If you know you can go 50, but you offered 40, and you're just trying to squeeze that extra 10, but you can live with 50, you need to let us know you're going to go 50. It's very, very important. Now, will banks begin to take less than reserve price? Now, I'm shifting gears completely now from talking about private REOs to bank stock, because we said at the beginning of the year, all of our bank reps told us that we would begin to see prices go down from the banks within the first or second quarter of 2017. And the reason for that was simple. Yes, it is directly related to what we're seeing in Washington. Not that it's bad or good, not going to do that. But I would say that because there's so much uncertainty about what's going to happen, the one thing the banks don't want to get stuck with is a whole bunch of inventory on their books like they did in 2008 when the market crashed. Now, let's understand something here. When you start talking about a market that cycled up for 62 consecutive months, eventually it's going to cycle back, which is the reason why these sellers are holding so close to their asking price, because they're going to take advantage of this market while this market is here now. They're going to take advantage, and they should. If you're a seller and you're watching this, you go, amen, hallelujah. The market's improved. You don't have to discount like you once did. People will buy it. We talked to one of our largest private vendors and a company that we've marketed for over 2 years. This was yesterday. And they told us, when they told me they were getting 80% of their asking prices, I said, from off the MLS, like you listed it and got 80% of your asking price, or you got that from a land contract buyer? And their response was, no, we have private investors. They had a private investor that offered 90% of the asking price in every property they had in Florida, which is about 300 properties in Florida. There are buyers buying right now at those numbers. You need to know that. That is happening. And so when we said that the banks were going to start to come down, we knew the banks knew what we knew, which was eventually, if the market continues to cycle up, history tells us that we'll start to cycle back. That is going to happen. That day is going to come, which, by the way, we're all looking very much forward to, unless you're a homeowner, of course, and that's another story. But the point is that we always expected the banks to start to come down, and they have started to come down. I just don't know that many of our bank buyers understand how these lists read. So what I'm going to do, I'm going to show you exactly what it looks like. Hudson Marshall has been taking less than their target bid now for several months. They, again, told us that they are concerned about there being a market cycle back and that them getting stuck with an inordinate amount of inventory on their books. They're concerned with that. So they don't want that to happen. So they are showing discounts. Realty Bid just last week, I didn't know how to phrase this, so I just used the old inside scoop phrase. But they told us, this is what we'll do for you, Charlie. We'll tell you what we can get it less for from the bank. And so we can tell our buyers, look, this is the price flexibility on these. I'm going to show these to you in a minute. With auction.com, if you haven't noticed, we've essentially stopped sending out the auction.com list. We're still on the VIP list. We still have access to it. If you see something on their website you want to bid on, we can give you the bank's reserve price. But they are not discounting at all. So if you're buying from auction.com, even in the Rust Belt or Bible Belt or the Southeast, you're going to be paying pretty close to fair market value. We have been expecting to see large HUD inventory to be released. We were told in January that the HUD properties would start to be released to the open market, and we have not seen it yet. We don't know why. We still expect that to happen, but we haven't seen it yet. Now, this is how it looks. Now, I'm giving you a screenshot of what a Realty Bid looks like. And of course, this is a very narrow list. These lists are much longer and wider and thicker and deeper than what you're seeing on the screen. But I'm drawing your attention to the column that says notes, because as you know with Realty Bid, they do not allow me to give you the bank's reserve. I do have the bank's reserve, but I can't give it out electronically for just disclosure reasons. We just can't do that. But if you say you're interested in the property at 9433 Polaris Lane in Wasilla, Alaska, which you probably won't be, but if you were to be interested in that Alaskan property, we can tell you that the seller is normally firm at the reserve price, and we can tell you the reserve price. Conversely, if you're interested in the one in, let's say, 1600 East Martin Drive in Mobile, Alabama, we can tell you that on that one, the seller will look at offers at $10,000 below the reserve. So we can give you the reserve, and we can tell you what range you need to be in to get it. Now, that is a big deal, and I'm going to tell you why that's a big deal with Realty Bid. Because in Realty Bid, most of these properties are under $100,000, and so I say probably better than 50% of them are under $50,000. So what does that mean? Well, if a buyer is willing to take $15,000 less than the reserve, and it's a $50,000 property, you're talking about a solid 25% discount. That's significant, but you got to look for it. And these lists come in big chunks to us, and so when we provide them to you, we do shorten them up and only send you what's in your neighborhood. But I'd really encourage you on a couple of these bank lists at least to really look at these. Now, there's another reason why this is valuable to you. The bank stock is always going to be better quality than what you're going to buy from a private REO vendor. Why? Because there was a homeowner living in it up until 30, 60, 90 days ago, which means in theory, the house has been better maintained. It hasn't been vacant. There's been somebody living there. The electricity works. The water's running. It's going to be in better condition than what you're going to get from a private REO that could have been sitting there vacant for 6 months to a year because it was bought at auction, it was bought at a tax sale, it was bought at the courthouse steps or whatever. Those won't be as good a condition as these will be. So while you may look at the price and you may go, well, they're looking for $35,000 for that, and I can get $10,000 off. That's $25,000. But boy, in Detroit, I can buy those properties for $15,000 or $10,000. That's true, but you need to also understand that you're buying a different kind of property too. So that's the Realty Bid list. I get this every week now. If you request the reserve, we're leaving in the column that tells you can buy under the reserve so you can see which ones. But pay attention to those now because we can now tell you where you can get discounts. Hudson Marshall has been doing this for a couple of months, and I want to explain how this works. Again, this list is much wider than what you're seeing here on the screen, but I'm just giving you the columns you need to know. You get a property. It's in Alabama. Again, obviously, Matt used the A's when he did this, so we're in Alaska and Alabama again. But you can see what they're starting to do. The starting minimum bid for seller consideration is highlighted in red. The minimum bid is in green. The minimum bid is the bank's reserve price. That's what the bank set to sell that property, is that minimum bid right there in that green column. Up to about the last 3 months ago, that was the only column there was. That was the minimum bid, and that was the price. There was no negotiation, as you all know. Now what they're doing is they're giving us a starting bid that the seller will consider, which means that if you notice there, it'll be anywhere from $5,000 to $10,000 less than the minimum bid. So, for example, if you drop all the way down to the very last one on the list, which is 809 Birmingham Road in Alabama, it's a $37,000 property that they're willing to take as little as $27,000 for. Now, that's a pretty significant discount. That's a 30% discount, folks. That's a significant discount there. And again, this is on a bank-owned foreclosed property. They're doing this now. I get this list typically on Friday, so I usually send it out either Friday if it's not too late, or Saturday morning, or if I have a solid week to get bids in beyond that, I'll maybe send it out on Monday. So you'll see these on either Friday, Saturday, or Monday. But you really should pay attention to these. The other thing you need to know on these, there's a bunch of these real Hudson Marshall lists now that we get. They highlight in yellow properties that's been through the cycle multiple times. They call it runs. It's been run through the auction maybe 15 to 25 times. And on some of the yellow ones, they call them low-end assets. And on those, they'll take any bid. So you can get lower prices from the banks now if you know what you're looking for, but you have to look, you have to be patient, you have to go through the list. And again, they come out every week, so it can be cumbersome when you're getting a list that comes out on a weekly basis. But you can get discounts on these if you simply understand how to read the spreadsheet. Just some friendly reminders when bidding on either bank-owned or private or REOs. Don't bid until you're done with your due diligence. I said that once, but it's important to know. Bid response time can be anywhere from 1 day on a private seller to 14 days from a bank. Somebody's just got to be patient. I don't always get, even from private sellers, I don't always get counter offers back in the same day. Sometimes I do, sometimes I don't. But it's usually anywhere from 1 to 3 days in private and up to 14 days with a bank. And really with a bank, it's usually more like 6 to 7 days. But anyway, we're going to buy ourselves that extra week. We can only get you into vacant properties in Hudson Marshall. We cannot get you into Realty Bid properties. If you're in the market, you know how to get in. You go to the local realtor if it's listed. And by the way, I should mention that real quick. Don't be surprised when you start to see properties get listed now, even with private sellers. I had a call with someone yesterday saying, I don't want that property. It's listed on the MLS. What good does that do me? Well, you need to understand something. You're going to see this more and more frequently. Even private REO sellers now are going to list their properties. Why? Because if somebody's going to pay them full retail value, an owner occupant, and buy it at full retail, they're going to sell it. Of course they're going to sell it. So would you. So don't be, it used to be people would say, oh, if it's listed, I want nothing to do with it. Well, I would encourage you to reconsider that strategy. You're going to start seeing more of these private funds list these. Now, all the banks have always done that. They list them, but you can't buy them through the listing agent. You can only buy them through either Hudson, Realty Bid, or auction.com. Many people don't know that. We've had plenty of people that said, Charlie, it's listed. I'll go to the MLS agent. I say, well, go right ahead. They can't sell it to you. They're under contract to Hudson Marshall. They're the broker. So, but you're going to see some listed. But having said all that, I diverted from my point there. My point was on lockbox codes, I can't get you into the Realty Bid properties. You can find your way in, but I can't get you lockbox codes. However, on vacant for Hudson Marshall, for some reason, they are not shy about giving out lockbox codes on the vacant ones. So if it's a vacant property with Hudson Marshall, I can get you a lockbox code. Request those, we can get you inside. Again, we're now requesting your highest and best bid when offering on any property, private or bank. And again, the point of this YouTube video today was the fact, just to stress, competition stiff, folks. Inventory is moving fast. Inventory shrinking. We certainly are one that believe that we're going to see a correction in the market. That's going to happen, but it's not today. So if you're buying today, you need to understand the market that you're involved in. Now, what we need to know, which is important, if you want to continue to see these lists, we need to hear from you. Now, many of you are seasoned buyers, and we know you, and we don't need you to do that. But if we've not heard from you for a while, we're going to pare down our list. Our list now is almost 100 buyers. So we have one employee that all he does is send out lists. We're going to pare that back. If we hear from you, we know what you're looking to buy, we'll gladly leave you on the list. If you are just not in a buying mode but want to continue to see the list, tell us that too. We totally understand that. There's always, everybody's in a different season. We understand that. Sometimes you're in the season where you're rehabbing. Sometimes you can be in a season when you're, in a buy mode. And sometimes you're in a season where you're just not in the market right now. You're going to wait to see how things shake out in the next. We understand all of that. We just need to hear from you, or we're just going to take you off the list. We also want to know whether you want to see both bank and private. My personal suggestion is, if I were you, I'd be seeing everything that comes out. If you're a buyer in this, investor in this market, and you're not looking at everything that comes out, you're cheating yourself, because you can get good deals all over the place if you know where to look for them at. And by the way, that's one of the things I really wanted to stress today, was just simply this. If you're a buyer right now because the market shifted, don't be discouraged because there's less inventory and there's fewer deals. You can still find deals. You just have to know how to look and know how to respond and react to the market and to the people that are out there selling. Second, we need to know what your buying markets is. As always, we do not send out lists in mass. If somebody calls us up and say, hey, I got a nationwide buyer, we say, no, you don't, because there is no such thing as a nationwide buyer. So don't ask for a nationwide list. If you've got a specific buyer in a specific market, we'll be glad to provide you with that list. Either email me directly, or Matt. Matt is at preauctionbids@gmail.com. And really, you should copy both of us, because actually Matt kind of runs the show. And so when it comes to inventory and our database of properties, Matt is the one that can tell you almost instantaneously what a property is, whose it is, what the price expectations are on that property. If you email Matt, you'll probably get better service than you email me, just being totally transparent. Or charlie.castro@sbcglobal.net. So that is my video for today. I think I did that a little bit under 30 minutes. If you want more information, feel free to contact us. That is both Matt and my number. We are indispensable. You can ask Matt anything that you can ask me. If you can't find me, which does tend to happen, especially on Mondays and Wednesdays when I'm playing basketball, you can always call Matt. There's Matt's number there on the screen, and he'll be glad to help you get you whatever it is you need. So I want to thank you for being with me today. Appreciate your time, and we look forward to working with you in the future. Have a great day, everybody, and God bless.